So my 1-year price target for this would be somewhere around $0.00. All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today I want to talk about a company called Immersion Corporation, stock ticker IMMR. So this is a small cap, high growth company. That's something that we cover a lot on this channel. So if you enjoy that content, do us a favor and please subscribe to the channel, and you can hit the notification bell so that you don't miss a video. The channel has a 10K to 100K challenge. There is a link below in the description to a video that describes how that works. In addition to that, if you look at the pinned comment, you will see a link to our Discord. We have a free Discord. I really enjoy chatting with our subscribers, and it's a great way to interact. So please check the pinned comment below, and we welcome you to join us at our free Discord. Okay, with all that said, let's get to Immersion. Immersion closed the day today. Today's January 6th, 2022. It closed the day at $5.33. This is very near its all-time low, and we will take a look at that. So that leaves it with a market cap of $176 million. So if we look at our 52-week range, Immersion has traded from $5.11 to $16.64. So it's at $5.33. So this is a very, very beaten down stock. You can see at one point it was at $16.64, and it's been a long, steady slide down. Now, this is true with most of the small cap, high growth stocks that I will be talking about in 2022. In December of 2020 and January and February of 2021, a lot of these high growth, small cap stocks skyrocketed. Money was just flowing into them, and because they're small cap, the price was running up through the ceiling. So that lasted through February and then basically abruptly stopped. All the money got sucked out of all of these, and basically all of these companies, the good and the bad, all took a vicious beating. And if you look at most of these small cap companies, you're going to see that they're down anywhere from 50 to 60 to 70%, some even worse than that. And Immersion Corporation falls right into this category, which is why I'm going to take a look at it. I believe this is one of the good stocks that got thrown out with all the bad stocks. But let's take a look at some other numbers. Before we get into the future, let's take a look at what they're doing right now and what they've done in the past. The market cap of this company is $176.5 million. If I look on their most recent financial statements, which were the September 30th, 2021 financial statements, you'll see they had cash totaling $118.6 million. Again, their entire market cap is $176 million. So $118 million of the $176 million is cash sitting on their balance sheet. If you really want to, you can subtract the debt from that. There's only $2 million of debt in this whole company. So $116 million versus $176 million. The vast majority of their stock price is cash. So what's unusual about that to me is this is a company that is now cash flow positive. If we go right down here, you'll see their operating cash flow in the trailing 12 months was over $13 million. So they are actually generating cash. If we take a look right here, shares outstanding, there's only 33 million shares outstanding in this company. So they have very low shares outstanding. They have a lot of money in the bank, and they are cash flow positive, making money. So the chances of your investment getting diluted anytime soon is slim. So that should be another huge benefit for this company. Now I want to just take a quick look at profitability. In the previous year, and this is actual, they made 36 cents per share. They're expecting 15 cents a share profit in the fourth quarter. Last year, they had 29 cents, so I wouldn't be surprised to see them beat that. Remember, the holiday season is in the fourth quarter, and you'll see that these guys are involved in a lot of gaming type things. So at 62 cents this year, there's one analyst covering this, and they're estimating 71 cents profit per share next year. If I go look at how that factors out, they have a trailing 12-month PE, which is price earnings ratio, of 8.48. So that is spectacularly low. And I'm just going to quickly compare it to the overall stock market to put that in perspective. Okay, so this figure shows the forward PE ratio of the Russell 2000. So the value stocks, which would be older, more mature stocks, which don't have a lot of growth left, but they are profitable, they have dividends, they have an average of a forward PE of 17.1 to 1. The high growth stocks in the Russell 2000 have a forward PE of 43.7 to 1. And again, these numbers are as of December of 2021. So these are new numbers. The overall average across the board for these small cap stocks is a PE of 24.7. This is a trailing PE of 8.48. So their forward PE is likely to be more like 5 or 6 to 1. So that is drastically under even the lowest number on this chart. So there is no sense to that. You can see this is an oversold, beaten down stock. If we look at the balance sheet, this is the 3 months ended September 30th, 2021, and this is the 9 months ended September 30th, 2021. We'll take a look at the 9 months, and the 3 month is even better than this. But let's take a look at the 9 month. Their top line revenue was $25 million, so $25,342,000. Their bottom line operating income was $11,973,000. So that is about a 45% net profit, net operating income, which is absolutely incredible. Most companies would be happy with that as their gross profit before all of their other expenses. These guys are almost getting 50 cents on the dollar as net income. So again, remember, they only have 30 million shares. So this year, this is 3/4 of sales, which was about 25 million. So this year they're expecting in the low 30 millions. If they can double that to 60 million over the next 2, 3, 4 years, they could very reasonably have a profit of $1 per share. Now this stock is now trading at $5 per share. So essentially, this is my thesis for why this stock is so oversold. So very quickly, I just want to go through their front page of their website just to let you know basically what these guys do. So they say made for touch technology. Their haptic technology is in the controller for the PlayStation 5. So this is an extremely big customer for them. Every PlayStation 5 that gets sold uses their haptic technology. That makes their controller interactive with touch and feel for the user. Two other very huge use cases. You will now see in almost every new car a center console that is touch screen. So that is all haptic technology. So they have some very big customers using their haptic technology integrated into their touchscreen user interface for automobiles. And thirdly, most of the new smartphones are touchscreen as well. So Samsung is a large customer of theirs, and so Samsung uses their technology in, most of the phones that they sell. So in total, they have over 3 billion devices currently in the world that are using their haptic technology. What they don't talk about here is late in 2021, the Metaverse became the buzzword. A lot of the companies that had technology relating to the Metaverse really took off. Well, this one, for whatever reason, has gotten left behind. And this is actually an extremely core technology for the Metaverse. Everything touch from the real world to the Metaverse is going to need haptic technology. So that is why I'm convinced that their growth rate is going to continue at an accelerated pace. Okay, so this is the immersion chart on the 1 day time frame. So each one of these candles represents 1 day. So this goes all the way back. This low spot right here was back in October of 2020. So you can see from that point, like we talked about, in November, December, January, February, all of these small cap high growth stocks spiraled upwards as money flooded into them. So this company went from $6 all the way up to $16.64 on February 10th, 2021. That's this blue line right here. Like most of the rest of these stocks, as I talked about at the beginning, these stocks got destroyed for most of the rest of the year. So you can see a quick, gigantic drop-off in the second half of February and the beginning of March. And then from there, a slow trickle downwards for the rest of the year. This is a very similar chart. You will see this on most small cap high growth stocks. And like I said, the good got thrown out with the bad. And for me, for all the reasons I've talked about, I believe this is one of the good ones. So let's just talk about some price targets. We're trading down here it closed at $5.33 today. You'll see I have a line at $5.10. Immersion bottomed out on December 15th, which was a little less than a month ago, at $5.10. And it has held that line ever since. It's got very close to testing it yesterday and today, but you can see it's about 20 or 23 cents above that. So very close to its short-term line of resistance. I have a line down here at $4.25 that dates all the way back to March of 2020. So that's coming up on 2 years ago. I don't even know that that line's very relevant anymore. I would say this is the stronger line of support. So if we were to go from where Immersion is trading right now, just back to where it was trading on November 18th, which was just a month and a half ago, that would be a 41% increase in the price of their stock. So I believe this is a very reasonable Q1 price target for Immersion. So that makes this about a 90-day target in my mind. Now remember, this is not financial advice. This is how I look at these charts. I'm picking points that I think are relevant. So please, everybody, do your own due diligence. You know, you can use mine as a jump off and a starting point, but know your stocks before you buy them. So as I always say, I look at things from a risk-reward standpoint. So right now, I think a short-term goal of 41% increase is reasonable. My next price target would be about $9.90, which is the purple line that you see right there. That was on November 3rd. So again, this was just 2 months ago the stock hit this number. And you'll see that that was a retest of a line of resistance that started back on April 1st. So this line of resistance is fairly strong. It's held up all the rest of the year. This run up right here was into earnings. So they released earnings on November 3rd after the bell, and you can see the stock had a little bit of a dip after that. But in anticipation of earnings, it did get back up to this line of resistance. So I think it's very reasonable to expect to test this line of resistance. In fact, I think it's reasonable to expect that we could break through this line of resistance within a year. So my 1 year price target for this would be somewhere around $9.90, which would be an 88% increase in the price of Immersion's stock. So again, this is not financial advice. Please check this out for yourself. I hope you enjoyed the video, and we will see you in the next one.